What's up, everyone? It's Caddy with MoneyVest. So today we are going to be analyzing Enphase stock, and we're going to be doing, our full fundamental analysis on this company using our very own MoneyVest platform. And the cool thing is that we've also added dynamic pricing for individual stocks on our platform. So now you can actually start to see the price actually change over here. Of course, Enphase is down quite a bit here on the day, selling off quite aggressively. So the entire price action on the day here. So if you change the chart to 1 day, you'll notice the price, of course, selling off quite aggressively here on the back of a significant note from JP Morgan, and of course a price cut on the company as well, down from 140s, 150s, I think, down to now 120s for this stock. And again, it's trading at just over $110 per share. Just to double check this stock here, 110.85 on TradingView as well, coming down to a very incredible support level at the moment as well. So again, if you want to get access to this entire platform, this is exactly what we're going to be utilizing to analyze this entire company here on the day, with an M score of 3.58 out of 5. So again, scoring a little bit better than compared to a lot of other stocks out there. Make sure that you drop a like and, of course, subscribe to the channel. There is a 51% discount on the beta launch that we're going to be having on July 8th. So again, take advantage of this special pricing, lock this in for life, because in the future, with new updates and new upgrades to future features, functionality, and tools, of course, the price is going to increase. So you can lock this in right now at a huge discount of 51%. So link's going to be down below. And again, we'd love to have you on board. So first things first, let's talk a little bit about what exactly took place or happened here on the day. So solar edge down after JP Morgan cuts price target on weak solar demand. So shares of renewable energy stocks in general were selling off quite aggressively. JP Morgan trims price target on SolarEdge from $73 down to $59 a share. And they also cut price target on Enphase Energy to $124. That's actually down from quite an incredible price of $128. So not in the 140s, $128 down to $124. But I do believe that this is actually quite a overreaction for Enphase stock here on the day, because such a small price cut, and of course the price in itself is selling off quite aggressively. It has an average outperform rating and a price target ranging between $71 and $166. We can actually confirm this, and again, depending on the analyst and depending on the time frame, there could be some variations in the actual price targets, but this right here is going to be the expectations for Enphase right now, with a buy rating. Among 23 buy ratings here, we got 17 hold ratings, and we got 2 sell ratings here on the stock. So overall, in general, the consensus is buy, with a high price target of $174. So that's going to be a high price target with a lowest price target of $46 and an average price target of about $129 on Wall Street. And I think the biggest concern with Enphase right now is the short-term forecast or short-term expectations here for the company. And that's exactly one of the biggest reasons why, if you come over to the 1 month chart, it looks something like this, where it obviously got back up to 140s, 138, and then sold right back down, because there's a huge resistance, huge area of supply that we've talked about here in the 140s as much as 139. So pretty much a triple top resistance for Enphase, and of course sold right back down. And of course, if you take a look at the 1 year chart, even the 3 year chart, we're seeing significant amount of declines for Enphase. It's pretty much been selling off quite a bit in that time frame, and that's primarily because of the short-term guidance and short-term expectations from Enphase. So this right here was the entire note from JP Morgan. So on specifically for Enphase Energy, JP Morgan Energy Conference takeaways. Enphase head of IR presented today at our JP Morgan Energy Power Renewables Conference. The company has seen stabilization of demand across its mature markets and continues to expect channel inventory normalization by the end of second quarter. The company feels well positioned with regards to domestic content and believes its microinverters will reach full domestic content qualification by the end of third quarter, which we believe is a competitive advantage. And the company noted that the commercial conversations around domestic content are progressing, and it believes room potentially exists to take place given the value the adder provides customer and the lack of alternative solutions to qualify. First take is going to be positive demand stabilization. So we know that inventory has been building up for Enphase. And if you take a look at some of the other updates, so Enphase was adamant that pricing remains consistent across the board, so they do have a lot of pricing power, including in the US market, and the company has no plans to reduce pricing holistically. While we believe channel checks may reveal some installers that are receiving lower pricing, that is typically part of regular special volume-based pricing arrangements and are generally offset by other customers that don't meet volume requirements facing increased pricing as well. So one of the things that Enphase does have is pricing power. And I think its technology is significantly better than a lot of other microinverters and solar panels and renewable energy companies out there. And for that reason, the company does have a significant moat over the long term. But I think one of the biggest reasons why Enphase stock has been selling off, and this is what the 1 week, 1 month, 1 year chart pretty much looks like, is because of its recent quarterly numbers and the short-term forecast being really bad. So if you come over to the fundamental analysis on our platform, this right here is basically the quarterly net income that we have plotted on the chart. So if I basically deselect and then select this again, you'll notice that right now what our software is doing is essentially plotting or giving you a visual representation of what the net income looks like for Enphase on a quarterly basis. So I've selected quarterly over the last 8 quarters. If we select 12 quarters, again, you'll start to get a little bit of an idea. I just have to reselect this. There we go. So 12 quarters, you'll start to get a bit of an idea of how well or how not so well a company is doing on a more quarter-over-quarter basis. And with Enphase, what really happened is that they actually saw very nice growth. And this happened, of course, back in 2021, 2022. They were doing really well up until 2023. Then it started to go sideways. And then if you take a look at what really happened here, they basically started selling off quite aggressively and in turn turned negative as well. So negative $16-17 million in net losses for the company as of the most recent quarter, which obviously is a pretty big deal. If you go on an annual basis, so if I go, let's say, for the last 7 years, and all we're going to do is we're going to start plotting in, let's say, total revenue, let's just do gross profit, let's just also do operating income, and then, of course, plot net income. Every single thing has grown really well. So on a year-over-year basis, the company's, in fact, actually done really well. But again, it's starting to consolidate sideways. We're seeing more flatlined revenue growth, a little bit of a gross profit growth, and little to none in terms of operating income and net income. It's really just been moving sideways. And of course, many people are expecting for Enphase to actually be generating a loss on a 2024 basis, because if you come over to analyst expectations or estimates here, if you scroll down, this is going to be on an earnings per share basis, which you'll notice analysts are still expecting for net income or basically earnings per share of $2.89, but that, of course, on a year-over-year basis is going to be a decline of 35%. So in other words, they're expecting a year-over-year decline in 2024 because of the decrease in earnings and the first quarter being negative, and that expected to, again, pick up in the future quarters as well. And this right here is going to be the revenue expectations from Enphase, which is still again, 36% decline here on an average basis of just over 1.4, 1.5 billion. But really, the growth is coming in starting 2025 and beyond. You'll notice that 44% growth, then we got a 21% growth, 20% growth, 20% growth. And on a compounded annual basis, we're looking at a growth rate of just over 11.5%. So 11.5% by 2031 is the expected growth here for the company. And then for earnings per share, we're looking at a growth rate of just over 18%. So 18% is going to be that growth rate. So right now we're looking at 2031. So that's 2031. And right now we're in 2023. So we're looking at 8 years. So this is an 8-year CAGR. This is a 7-year CAGR. This is a 6-year CAGR. This is a 5-year CAGR. 4, 3, 2, and then 1. So we're going to be utilizing this. That's a 7-year CAGR of about 20% when we're estimating for our intrinsic value for Enphase. So we're going to be using just a little bit over 20% in terms of that compounded annual growth rate for the company. So let's just quickly go over to some of the other MoneyVest metrics as well. And let's go over to 7 years and let's start plotting some of these numbers as well. So again, you can take a look at the revenue. You can plot, a lot of other things like gross profit, like we already did. Net income, again, going from net losses to now positive. You can also take a look at margins. So gross margins, let's plot net margins as well. So this is, again, you can see from going negative to now somewhat increasing, but in recent quarters, right? Last couple of quarters I showed you, this number has been coming down. Even though company did really well on a 2023 basis, last couple of quarters, it's actually been selling off. It's actually been coming down because fourth quarter of 23 and the first quarter of 24 obviously was not as good as what we are seeing right now. You can plot return on assets, return on invested capital, and then again, some of the other numbers as well. You can start to see some of those numbers more stable. It's been coming down a little bit, but more or less stable here. So for example, we've got return on assets at well over 12.5, almost 13%, return on invested capital at about 17%, net margins of just over 19%, which have been obviously increasing. And one of the things that I really like to use on this platform is going to be the valuation analysis. So if you come down and take a look at the valuation here for Enphase, and let's just plot price to earnings, price to sales, and price to free cash flow. This will essentially tell you how the valuations traded for Enphase. And what you'll notice is that, of course, 2020 and 2021, we had a very, very high valuation, but now it's starting to come down. So to give you a little bit of an example, price to earnings now 41. Even though 41 is expensive, it is high on a 2023 basis. It has obviously come down to from the insane levels of 170, from the insane levels of 90. This right here is price to free cash flow that it's now trading at 30. In the past, it's traded as much as 51, 82 to as much as 113. And price to sales has also come down to now under 8. So even though the valuations come down, in my opinion, it's still a bit of an expensive stock. So what we're going to do is we're also going to take a look at the share buybacks over the last 7 years. They have increased the share count by about 16%. I'm going to deselect all of this. And what you'll notice is the share count has obviously increased quite a bit, gone from 83 million to well over 143 million. If you go back to, let's say, 10 years, and then again, we select shares outstanding, it's gone from just about 42 million to now 143 million. So that's been about a 13% CAGR for Enphase, which obviously is a very, very high number. That's why the check mark says that share count terrible. They're not buying back shares. Instead, they are increasing shares. One more thing that I wanted to point out is stock-based compensation as a percentage of revenue, operating cash flow, and free cash flow. It is somewhat stable to a little bit more inefficient because that number on an average basis is high, 5% of revenue, but 12.5% of operating cash flow and just under 25% of free cash flow is given out to, again, employees of the company, insiders, as stock-based compensation. So that, of course, is a really high number as well. And then, of course, if you take a look at, return on equity, return on invested capital on a 10-year basis, on average, it's been a little bit more negative as well. But again, 2023 was, of course, a very strong year for the company. So what we're going to do is we're going to come over to the analysis tab here. We're going to go over to the discounted earnings model. We're going to autofill, and the earnings as of last year, $439 million. We're going to forecast for the next 7 years, and I'm going to apply a growth rate of about 20%. Price earnings multiple over the last 7 years on average has been 54. I'm not going to go with that insane number. I'm actually going to go with somewhere closer to 25, which I think is a lot more appropriate, a lot more reasonable. 12% discount rate, 10% of margin of safety. Share dilution, as you can see, 7 years, 16% is, again, quite high. And, I feel like as the numbers get bigger and bigger, this number is going to come down. So we can, go with a little bit closer to 6-7%. So if you go with 6% share dilution, that Enphase is going to do over, let's say, the long term. And if you hit calculate, now we're looking at, intrinsic value of closer to $78 per share. And that's primarily because of the shares outstanding, right? So if you go and do 0% shares outstanding in terms of share dilution here, and if you apply, let's say, just about 1%. So if you apply a 1% share dilution here, we're looking at the fair value being exactly what it is today for Enphase at around $109.74, meaning that the price and the intrinsic value are going to be matching, and again, the fair value is going to be exactly where it is today. But if you are going to be, let's say, assuming for share dilution of just a little bit, let's say 1 to 2% or 2% here, then of course your fair value would come down to now low 100s at closer to $102, $103. So this is really just telling you what the historical numbers have been. 10-year, it's done share dilution by about 13%, as you can see over here. 3-year, it's done by 0.33%. So really the idea that I want to give you here is, number one, that the share dilution is a lot less in the last 3 years because the company's obviously grown tremendously over the years and the numbers are getting bigger. And that's exactly why I don't believe that we're going to see the 12 to 13% share dilution moving forward. So that's why for 7 years, I'm only forecasting for, let's say, 2, maybe 3% share dilution, growth rate of about 20%, because that's exactly what analysts are also expecting. That I think is a more reasonable growth rate if the adoption for microinverters takes off, and a 25 times P multiple over a 7-year time period. And we're looking at a fair value in the low 100s for Enphase. Very quickly, I also want to go over the balance sheet so we can come over to fundamental analysis. And what I'm going to do is I'm going to go over to the balance sheet section over here and then show you what the total cash looks like versus the total debt. So long-term debt sitting at just under 1.3 billion. And this right here, more cash than debt on the balance sheet as of 2023. Again, we can come over here, select quarterly numbers for the last, let's say, 8 quarters. And right now, again, you can see that this number switched from the end of 2022. So let me just select 12 to 16 quarters. There are some discrepancies with this data, folks. So I just want to be very clear that this is not exactly perfect because there are going to be some bugs. But what you'll notice here is that the company still has more cash than debt on the balance sheet as of the most recent quarterly report. So we're looking at $1.3 billion worth of cash with long-term debt sitting at $929 million. And let's say that we also want to include for total current assets and total current liabilities as well. Total liabilities, for example, and this is where we are with the balance sheet, which you can also see, again, over a 12-quarter period for the company. So assets, total current assets versus total liabilities, it's about equivalent. But if I include for total assets as well, of course, it's much higher. So company's got more total assets and more cash compared to total liabilities and debt on the balance sheet. So fundamentally speaking, this is a company that, of course, has been growing really well. Revenue, earnings, margins, everything's been expanding well, but especially over the last 5 to 7 years. But the last couple of quarters, of course, this company is struggling with a fair value sitting roughly in the low 100s for Enphase. There is, in my opinion, a ton of opportunity for this stock over the long term. If they're simply able to grow by about 20% and apply a 25 times P multiple, the price target for this stock is going to be closer to $200 plus over the long term. So very strong support here inside this green rectangle. So that right there is going to be that support level. Resistance all the way up to $139, close to $140 per share. And of course, we're coming back down to that very strong area of demand and that support for Enphase. Another support to keep in mind at $92 per share. But like I said, coming back down to that intrinsic value for Enphase at the moment. So hope you all enjoyed this video, found it helpful. Make sure that you drop a like, and don't forget you can access this entire platform and again get the early beta access for MoneyVest platform here with a 51% discount and a special pricing you can lock in forever. Link's going to be down below. If you have any questions, feel free to ask. As always, happy investing. I'll see you all in the next video.